South Africa has been actively wooing new investors and recently held an investment conference where it obtained over $80 billion in pledges from investors. The country was aiming to reach 1.2 trillion rand, or should we just say $65 billion, but has surpassed the pledge target so far, suggesting that achievable success is on the horizon for the most industrialized economy on the continent. However, this cheery news is not without its challenges. Local and international firms have raised concerns over the country's electricity supply issues. The rolling blackout and government's inability to ease the crisis has resulted in low investors' confidence. South Africa's grey listing by the Financial Action Task Force in February has also made foreign investors reluctant to invest in the economy because international counterparts will have to undertake increased due diligence when dealing with South African entities. South Africa's political climate is also heated and investors are cautious. More than before, keen monitoring of major actors is what they're trying to do to know whose favor the pendulum will swing before more commitments are made. Now, the question this morning is, can the Southern African nation successfully attract the kind of investment it needs to revive its economy? So we are being joined by Johann Els, who is the chief economist and business analyst, Old Mutual Investment Group. Thank you so much, Johann, for joining this conversation.
Thank you. Good morning.
Now, at the recent South Africa's investment conference, President Cyril Ramaphosa elaborated on various initiatives that his administration is embarking upon to revitalize his country's economy. So I'd like you to give your own bit of evaluation as regards the deliberation, the recommendations and conclusions of that particular conference.
Yeah, absolutely. South Africa is a very small but very open economy, so we are in absolute need of foreign investors to come and invest in our country. We need increased investment in infrastructure, in logistics, and especially in the energy field, as you mentioned in your introduction. So as we're a small economy, we cannot generate enough savings in the local economy to facilitate the investments that we need. So we are very reliant on foreign investors, and that's why the president has started with this annual investment conference to attract these foreign investors. But as you rightly highlighted, it's not that easy given the challenges that we face. Foreign investors, any investor really, wants a return on his investment. So for that, you need a far faster growing economy to be able to generate the returns that foreign investors would need. And with that, we have struggled significantly in the last several years, decade and more. So part of that generation of a higher economic growth rate would have to come from policy. And we've had increased activity in the policy arena where we've tried to do the right thing, but implementation of these policies have been lagging, not implementing the right kind of policies soon enough. So certainly, as you highlight, the electricity issue is a big one. So there's lots of concerns amongst investors. Can South Africa implement the right policies to generate a higher sustained economic growth rate that is needed to attract these foreign investors? And that's the crux of the matter. Can we do this in this period when we're also heading into elections next year and foreign investors are worried about the political environment? And so all of these factors have had a big influence in terms of limiting confidence in the SA economy. And confidence is a potentially big driver for economic growth. So lack of confidence is a big detriment to that sustained higher economic growth that we actually need.
Johann, you talked about a couple of things that actually covers the scope of our discussion today, but then I'd like us to look at the issues surrounding the challenges affecting South Africa. We talk about the COVID-19 pandemic, we talk about civil unrest, talk about even natural disasters, the high cost of living, unemployment rates going high. Challenges that seem insurmountable, but then, as you've said, looking at the policies on ground and implementation, maybe there could be some sort of reprieve. But then I'd like to find out from you, how have these challenges impacted the investment flow in the last 5 years into South Africa's economy?
Yeah, absolutely. Again, those challenges, if it weren't for these challenges, then we've had a significant bigger flow of foreign funds into investments in South Africa. But you know what? Investors see opportunities. So even if it hasn't been great in terms of economic growth or implementation of those policies, that has held back economic growth, that has held back these potential flows of investments. We have gotten some investment flows. As you rightly said, the targets that the president set in terms of that investment conference that we've had was exceeded. But the problem is, lots of those money are just pledges at this stage, and they haven't been implemented. The projects in many cases haven't started. So the president highlighted that around 70% of the number of projects have actually started, been implemented, have been invested, or has started the process of being invested, but not all of it. And in terms of new pledges, because of these uncertainties, some of those pledges might actually never come to fruition, might never be implemented, and that's the problem. So those are the issues that we still sit with. So the bulk of the negatives, all these challenges that we face, probably means that we're never going to get back to the type of growth rates in South Africa that we actually need. So in the early 2000s, we did manage to get growth in South Africa above 5%, on a sustained basis for some years. And that's the type of growth that we need. The challenges probably mean we're never going to get back towards those 5% plus economic growth rates on a year basis. But we have seen some improvements. It's not all doom and gloom. And that's important part of this process. We need to look through the noise. We need to see where are we heading. And some of the policy changes that has actually been implemented, that will get us to somewhat better growth than the 1% annual average growth we had in the years 2015 to 2019. Dismal growth, 1% is almost nothing, but we can, through these policy changes, get back towards the 2.5% growth rate. Now, while that is not enough, it's not the 5% plus, it is significantly better than 1. It's more than double the 1. So that will start to make some impact in terms of confidence, in terms of the impact that we can get in improving confidence amongst investors, amongst businesses, amongst consumers. So we're on the right track, even though it's not fast enough, not good enough, not there yet.
All right, so even if we say 1%, 2.5% or 5% in terms of accruals on investments, do you think that these investors will be able to recoup on their investments? Because you would remember that South Africa is still on the FATF grey list, and it has tried as much as possible to get out of that. There are so many plans, implementations, reforms being put on ground by Cyril Ramaphosa to help the country get out of that grey list, because of course there are restrictions attached to that. We know what that means. So do you think that investors will be able to recoup on their investments with this sort of embargo or restriction on South Africa?
I don't think the grey listing issue is a big detriment in terms of investing in South Africa. I think the grey listing issue has more impact in terms of trade, actual goods and services trade and financial flows, not really the investments. I think foreign investors look in terms of the potential return that they can make more towards policies that impact on economic growth. And there I do think there's some improvement. The grey listing has, as you rightly say, some impact in terms of extra due diligence, maybe somewhat higher transactional costs, but I don't think that's going to seriously impact in terms of investment returns down the line. I also think the Financial Action Task Force highlighted specifically that one of the big reasons why South Africa has actually been grey listed, and in fact I don't like the word grey listing, it's heightened scrutiny, was because of the final legislation was only approved late last year. So the Financial Action Task Force hasn't actually really had an opportunity to see the implementation of the regulations around this new legislation. So I think we're probably going to get out of the grey listing quicker than what many people think. I don't think it's had that big a negative impact. Perhaps an impact in terms of confidence. Yes, there I would agree.
All right, let's talk about rolling blackouts that has lingered on for 16 years in South Africa. The load shedding crisis is still ongoing. It's in between stage 6 and stage 8 as we speak. And now, don't you think that could also be a major drawback for investments into the country?
Yes, absolutely. The initial impact in terms of lack of confidence, driving confidence weaker because there's no electricity or not enough electricity to generate the kind of economic growth that we need to generate the investment returns that foreign investors need, But then foreign investors are pretty savvy and they're starting to look through these numbers. There's significant private sector investment in the energy field coming online pretty soon. So yes, there's significant blackouts at the moment, but a year from now, 2 years from now, 3 years from now, investors look forward, so that's important for us to always also look forward. A couple of years from now, the risk of blackouts will be significantly lower than what it is now. So certainly now impact on confidence, but down the line over the next few years, significant private energy is coming online. Plus also, the economy has managed to become more resilient. We've recently calculated that the SA economy is now using 25% less electricity than in the year 2000 to generate the same GDP. Part of that is lots of self-generation within manufacturing companies, so they can cope better, do the manufacturing processes without Eskom's, our electricity utilities, electricity. But also the fact that the economy has moved more towards the services sector side, and in services sectors, there's somewhat less reliance on electricity than in the production sectors. So there's a couple of factors at play here that means you cannot directly translate a blackout into lack of economic growth. So there's some improvements coming through. And incidentally, the energy policy change in South Africa is one of the biggest ever policy changes where the government is allowing the private sector to come in. And that's rolling through into a number of other sectors as well. So that's one of the biggest policy changes ever in South Africa, allowing the private sector to now run these traditional state-owned enterprise functions. And I think that's a game changer in terms of future economic growth in South Africa. That's something that never can be turned around. So instead of actual privatization of state functions, I call this privatization by stealth, in getting the private sector more involved. So getting that action through in the energy sector and other logistical sectors and other areas of the economy, I think that will drive confidence somewhat, and that will give foreign investors also that confidence that government policy is actually moving in the right direction, in the direction of more economic growth down the line.
Johann, you're saying that investors are still keen and their confidence is still resilient as regards investing in South Africa's economy. You also used the word they're savvy, as it were. But then we have on authority that there are some investors who are a little bit reluctant still in investing in South Africa's economy, maybe based on some other challenges that we are not keeping our eyeballs on. For instance, we could talk about the issue of insecurity, talk about the issue of the ease of doing business, talk about the issue of corruption that has equally plagued the past and the previous administration. That is just to mention a few. So do you think that this could also be some sort of impediment and a reason why some investors might still be reluctant to want to plug their funds into South Africa's economy?
Yes, absolutely. So there's a couple of issues here that you mentioned rightly. These issues will hold some investors back. The corruption, crime and security situation in the country. There's the ongoing lack of the skills needed in changing economy towards more technical, more services sectors. So education system in South Africa, overly regulated labor market. So all of these factors, the negatives, the stuff that foreign investors would be worried about, that's the stuff that I think is holding us back from achieving 5% plus economic growth. But the underlying improvement in some other areas, that gets us from 1% already towards 2.5% growth. So absolutely, some of these things will never change quickly. It takes time to deregulate the labor market. It takes time to change the education system towards more skills-orientated, more technical education. So lots of these things take a lot of time. So yeah, the negatives will hold foreign investors back. But in a global environment where perhaps US interest rates are reaching a peak and investors are looking forward to US maybe recession coming later this year, even if it's a mild recession, some interest rate cuts in the US from next year onwards. That's a typical environment where investors want to move towards emerging economies, the risk on trade. stronger growth in emerging economies. South Africa will get some of that flows towards emerging economies. Not all of it. These negatives that you rightly mentioned will hold some of those investors back, and we can never in South Africa compete to big EM countries like a China, for instance.
Okay, Johann, before I let you go, I just quickly want to chip this in and get your response on it. Pledges are always pledges. They will just keep remaining pledges until they've been redeemed. And the investors have made these pledges to about $80 billion. But then we have a major election coming up in South Africa next year. What role do you think this will play in terms of the influence or the impact it will have on these investors' behavior, confidence, and of course, how they will be willing enough to redeem these pledges? What do you think they'll be looking out for before they eventually choose to redeem these pledges? Just in about a minute or two.
Yes, absolutely. So the political environment will probably mean volatile markets for the next year or so until there's a resolution after next year's elections. But there's underlying the policy improvements in terms of embracing the private sector's role in the economy that will not be able to be turned around even after the elections, no matter what happens in the elections. So there's an underlying improvement. So while the uncertainty until after the elections will hold back some investors, I think lots of the others that has got a slightly longer term view will actually come back into the SA economy in any case.
All right, thank you so much, Johann. A lot of optimism coming from you there, and we hope that that can actually translate into something positive for the South African government and economy. Thank you so much for joining us.
Thank you.
Now, this influx of capital investments that South Africa is hoping will come into its economy will surely provide a much-needed boost for its industries. It will also create new job opportunities and contribute to the overall economic growth that the government is so much looking out for. However, the Southern African nation will have to do more in addressing the various challenges identified today that Johann has mentioned to attract and sustain investors' confidence and, of course, rekindle the belief that its investment climate is favorable and, of course, lucrative for would-be investors. So we can only hope. Now, we'll go on a short break, and when we return, we'll bring you international business stories. Do stay with us.